So now we have discussed fundamental analysis and understood the two aspects, qualitative and quantitative, and how to basically use them to make a assessment of the value of a stock or for shortlisting a stock for investment purposes. Now, understand fundamental analysis for someone who has never done it before can be a little intimidating. It's actually a skill, and with practice, you will get better at it. So, I would encourage you to pick up any company or any sector and try to analyze the stocks within them, not for investment purpose, but just for the sake of practice and developing your skill, because I think it's very essential for someone who wants to be a successful investor to master this art. But till you do that, that will obviously take some time. There is one more template that I want to teach you. So let me introduce you to Mr. William O'Neill. So he is actually the author of the book How to Make Money in Stocks and the founder of Investment Business Daily. So Mr. William O'Neill studied some of the greatest performing stocks in history and try to identify the common characteristics of stocks that outperform the broader market. So, in this book, he's actually combined both technical and fundamental analysis for the purpose of his investing, and which he has also taught. And based on that, he has created a CanSlim investing system, which includes both fundamental and technical parameters. So let's at least discuss the fundamental parameters, which I feel are very useful for a very quick way to kind of filter out stocks that you should or should not be interested in. So let's go to the Okay, so now let's discuss the CanSlim investing system in detail. So this system actually works best on growth stocks. It also works very well on stocks that are moving from mature phase to the growth phase. And also it can be used as a quick tool to analyze any stock that you may be interested in for an investment or for trading purpose. So CanSlim is actually an acronym, and let's discuss one by one what each of them stand for. So first is C, which stands for current quarter growth. So we are actually looking for a huge increase in the current quarter, say something in the lines of 20% plus, and look out for a big one-time gain, which comes after a period of consistency and acceleration in earning. Also check other stocks within the group in order to make sure that it's not the seasonal nature that is causing this, but it is actually that our stock is outperforming its peers. This is an early indicator of companies that may be starting a new growth phase. So look for sustainable, reasonable, and industry adjusted growth. Next is A, which stands for annual earnings growth. Uh, Over here also we want a big change in annual earnings, something in the tune of 20% or more. And this needs to come after a period of 2-3 years of growth. Again, we are looking for sustainable, consistent growth, which are adjusted to the industry. One point that I would like to discuss here is that in bear markets, there is a lot of pressure on stock prices and they are unable to rise. But when a company in the back end is doing very well in terms of year on year, it is able to deliver growth. The PE ratio of the company, which is basically price of the stock divided by the earnings, is kind of held back because of limited movement of the stock price. So, when the tide of the market turns and there is no pressure of a bear market, such stocks which become undervalued during bear markets tend to rise the fastest and they tend to rise the first. So it's very so you have to keep an eye on stocks that are not able to perform just because of the bear market pressure, but in terms of fundamentals, they're doing very well in the back end. Third is N, which stands for new products or service. So basically, we are looking for new leadership in the market or some new condition that puts a company in a position of advantage. So new products, newer companies, innovation, disruptive within its market space. So every bull cycle is led by such innovative companies. So you always have to keep an eye out for these. So any company that has launched a new product or a service, or there has been a management change, or a new vision for the company. So such things can actually become a catalyst for growth. Next, we have to look at S, which stands for supply and demand. So this can be measured using technical analysis, but over here we'll still discuss it briefly. So basically, we are trying to assess the demand of the shares in the market. So this demand can either come from insiders within the company buying, or it can come from institutions showing interest in the stock. So one point that you should know is that if insiders are selling their shares, it could be for many different reasons. But if they are buying, that can be only because of one reason, that they believe that there is growth in the upcoming quarters or in the upcoming cycle. So you have to check if there's any buyback happening with companies doing any buyback. So which kind of limits the amount of shares in supply, and check for any new institutions which have started buying the stock. Now L stands for leaders, not laggards. So we are looking to buy only the highest quality companies within its sector. Also, we have to check for one way of checking this is obviously the fundamentals, and the other technical aspect is relative strength. This we will discuss later. So ensure that the company you are interested in is a leader within its industry. So only look for the top tier and nothing else. I stands for institutional sponsorship. So are mutual funds buying? Because what we discussed earlier as smart money or institutional money, we want to buy within their footprints. So, because 70% of the volume within the market is these institutions, and if they get interested in a stock, the price tends to do very well. So, you can look at what mutual funds are buying or what they are holding, what pension funds, treasuries of companies, what are they buying. Then the last one, which is M and is possibly the most important, is the market trend. This comes from the discussion we had earlier about the market cycle and how it influences stock prices. So three out of four stocks follow the trend of the overall general market. So you have to be very well aware of which cycle we are in. Is it a beginning of the uptrend? Is it the end of it is the end of a markup phase? Is distribution happening? Is accumulation happening? So these things we have to be aware of. So we'll discuss here an example of putting all this together to analyze a stock. And one thing that I've mentioned here is that actually IT and pharma were the leading sectors when the markets turned after the COVID crash. So any opportunity within that sector was actually a good opportunity. Okay, so let's now discuss one. Now let's discuss and try to analyze a stock. So now let's take up a case study that will be Tata Elxsi, and we'll be looking back at March 2021 to and see if Tata Elxsi then qualifies as a good investment opportunity. I will obviously be discussing current case studies also, but that's not part of this course. Maybe sometime later I'll take that up. So anyways, let's start. So the first thing that we are looking for is current quarterly growth. So over here, if you can see that I am looking at this quarter and comparing it against September 2020, which is actually a 32% jump. So this is where I should be getting interested in the stock. And then once I see this figure, I look back and see if there is sustainable and consistent growth. So over here, I can see that from September 2020 and September 29, we have actually grown more than 50% between these two, and about 45% between these two. So yeah, so it's pretty clear that there is consistent growth. So C of CanFlim qualifies. Then let's go to the next one, which is A. That's the annual earnings growth. Over here also we are looking for a big number to kind of get us interested in the stock. So looking at the March 2021 results, so yeah, so over here you can clearly see that this is a massive jump of about 50%. So this is great, and this should be coming on the back of 2 3 years of consistent growth. So, so over here we can clearly see that the one-off downturns is okay, but when you compare, if you do a 10-year comparison from 31 to 350 is almost 10x, which is great. And in the last 5 years also, we have been able to grow very well. So I think there is no doubt that on annual earnings growth also this qualifies. The next thing that we have to look at is new product or service. So this is some extracts that I took from the annual report. So Tata Elxsi provides technology consulting, new product design, development and testing services for broadcast, consumer electronics, healthcare, telecom, transportation industries. So and also you can see here that it works with leading OEMs on technologies such as autonomous electric cars, off-highway vehicles, IoT, analytics, artificial intelligence. So you can clearly see that Tata Elxsi is working on things that are specifically in the growth industries, and it's clearly offering something in the market that other technology companies are not. So in the N also it will qualify. Now let's look at supply and demand. So over here we'll just, for supply and demand, we'll just see if the stock price is rising. So that is the best indicator to measure who is the price actually in demand or not. So from May 2021, or actually this is September 20, price was about 1000 rupees, and in March somewhere here prices almost doubled, more than doubled. So this is a clear sign that the stock is in very high demand. So on S also it qualifies. Now let's look at L. Leading L, which stands for, is it a leader in or a laggard? So it's clearly a leader because it is a part of the Tata group. It is working. Some of the clients are some of the best Indian as well as global companies, and in terms of market cap and in terms of results, we can see that it's a very strong company within its space. So L also qualifies. Now let's look at I. For I, we will actually look at institutional sponsorship. We will look at shareholding patterns. So over here we can see that the promoter holding has not changed, which is very good. So the promoters believe in the stock and they don't want to sell it in any way or form. Then foreign investors actually are increasing their stake. So it's about almost about 4% in the last 1 year. Domestic institutions, which are mutual funds, pension funds within India, are also, we can see here, up till March about 5%. So there was a dip here, but then again it has almost doubled. So it's clearly the interest is rising, and so these guys are actually buying from the general public whose stake is falling. But this actually is much better, much stronger, because this is money which has a long term view and they don't sell easily. So it's better for them to build strong positions in the market. So clearly I also qualifies. Now last is M, which is the market direction. So we discussed that in 2020 2021 IT sector, to which Tata Elxsi belongs to, was one of the leading sectors within the market. The market was also moving out after the COVID correction. So both broader market as well as the sector were doing very well during that time. So M also qualifies. So here we can see that the CANSLIM. So this stock qualifies on all parameters, and we can now look at an entry into it using technical analysis, which we will discuss in the later section. So this is broadly how you can do the CAN/SLIM analysis on any stock. All this information is available on screener.in and and on the annual report, and it will probably just take you 15-20 minutes to do this kind of an analysis. Okay, so now we've covered the third part as well, which is intrinsic value or company fundamentals. A key takeaway here should be that in order to become a successful investor, you do not need to be an expert fundamental analyst. All that is needed from you is to develop an ability to distinguish a good or a great company from a average or a weak company from within the same sector or group of stocks. So if you are able to successfully distinguish a strong company or a company that is on the right growth path, then in the correct market cycle, and if the sector cycle is also in your favor, you will do extremely well. Now let's move on to the last section, which is technicals.